So I remember, to date, I still have about $600 locked in one platform because I could provide proof of address. I know it's really interesting because I have never received a water bill. I have never received an electricity bill. I have never, received a receipt or an invoice from my landlord, right? Because that's the nature of how things work in the global south. The interesting thing with gig workers is we are not necessarily unbanked, right? We don't fit into the profile of banking the unbanked. We have access to bank accounts, we have access to payment rails, but then because of the unstructured nature of our income, it becomes extremely hard, for these rails to work for us how they do. I remember the first time we were co-handling payroll with the CEO, because at that time I was COO. He told me he takes the whole day off to handle payroll when he's paying guys, because there's a time he sent money from it's a US-based company banking with Chase Bank. There's a time he sent money from Chase Bank to I think 2 of our designers were in Nigeria, and the bank literally froze his account and told him to go to the branch physically to confirm why he was sending money to Nigeria. It was that bad, right? That is where the problem comes in, right? Global payment rails are built for predictable transfers. They're built for remittance, sending money home. They're built for sending revenue back home. They're built for very predictable transfers and very predictable payments. But then the nature of gig work is very unstructured and very predictable. So then at the core of how we're building paid is just like making every payment local, in the sense that the client in the US feels like they're just doing a simple ACH transfer, and the freelancer in Kenya feels like they're just doing a simple payout to M-Pesa, right? So it's about connecting local payments to build this global network that makes it easy to pay and get paid. The whole vision has always been that we're building a bank for gig workers, right? I mean, I can't say that in front of regulators. We are not building a bank. But yeah, that's the vision.
Hi everyone, and welcome back to another episode of the Fintech Forum. I am your host Phylis, and today we are joined by Ben Wepundi, the founder of Paid, a startup that's reimagining how payments work for freelancers, creatives, and digital workers across emerging markets. Ben, welcome to this episode. It's so nice to have you here today.
Thanks, Phylis. It's also nice to be here. I'm super excited about chatting.
Awesome. So let's get into your background. You have such a pretty impressive background. You've been a software engineer. I'm not sure if you still are. You've been a CTO before. You've also founded a company on housing. Can you share a bit about your background until this point?
So I think where it all starts, specifically for Paid, is at the point where I left law school. So I joined campus to study law. That didn't quite work out, because of circumstances. So 1.5 years down the line, I had to take a break from law school. So at that point, it was all about figuring out, how do I survive in Nairobi? How do I survive in the big city, right? So figuring out where I'm making an income from, where I'm getting, money from generally. So this is where I started exploring my second passion, which has always been tech, right? So back in high school, I learned the basics, the HTML, CSS, and JavaScript of this world. And my first startup, Easy House, was basically born out of me trying out, those skills after I realized that on joining campus, it's extremely hard to find accommodation. So then, post dropping out, as people would call it, I started, just expanding my knowledge in as far as development is concerned, and that eventually led me, to go through Moringa School and Powerland Project, and I started, doing all of these freelance gigs, web developer, graphic designer, etc. And that grew really fast, because I started working with guys from even beyond, beyond here in Kenya, working with guys in Nigeria, in South Africa, clients from the US, and now that is where I interacted firsthand with, the nature of how money and global payments work for the gig economy, right? So I remember, to date, I still have about $600 locked in one platform because I could provide proof of address. I know it's really interesting because I have never received a water bill. I have never received an electricity bill. I have never, received a receipt or an invoice from my landlord, right? Because that's the nature of how things work in the global south. So, when I came together with a couple of my friends, specifically Japheth, my co-founder, we were working together last time as interns at Powerland Project, and we were like, why doesn't global payments work for gig workers how it should? Because you see, the interesting thing with gig workers is we are not necessarily unbanked, right? We don't fit into the profile of banking the unbanked. We have access to bank accounts, we have access to payment rails, but then because of the unstructured nature of our income, it becomes extremely hard, for these rails to work for us how they do. And so we decided to build a fintech with zero knowledge in fintech and how money works, which was both interesting and I don't want to say stupid, but stupid in its own way. And I think 2 or 3 months down the line, while building Paid, I got this gig, a company in the US as a software engineer, an edtech at that time. I'm doing a lot of research, consulting, and it was just like when AI was basically peaking. That was about in 2023, I think, 2023. So I joined the company as a software engineer. It was remote, working 3 p.m. to 3 a.m., working with teams across Africa, across LATAM, across Southeast Asia. So that is the first time, I experienced like a distributed team and like a truly global gig team, right? I think about 5 or 6 months down the line, I got promoted to CTO. I am very evangelical, for lack of a better word. For context, my dad is a bishop, so that is where I get most of my preach the message from, right? So I just apply the same principles I got from him, just like being an evangelical founder, being evangelical about my story and all that. So 6 months down the line, I become CTO. I know this is the first time I am now managing a team and seeing how crazy it is to work with guys across the world, who are not necessarily employees, right? They're like, freelancers, creatives, researchers, writers, etc. Another time it's when also like again AI was just peaking, so the company was slowly shifting into introducing this AI consulting studio where we build AI tools for other businesses, other companies. So I think 2 or 3 months down the line, because of my interest in business as well, considering I've started one startup before, I'm already running Paid at that time, trying to figure things out, got promoted to CEO. So at that point, I think I remember the first time we were co-handling payroll with the CEO, because at that time I was COO. He told me he takes the whole day off to handle payroll when he's paying guys, because at the time he sent money from, it's a US-based company, banking with Chase Bank. There's a time he sent money from Chase Bank to, I think, 2 of our designers were in Nigeria. And the bank literally froze his account and told him to go to the branch physically to confirm why he was sending money to Nigeria. It was that bad, right? And so now you can imagine now that in the context of someone who's sending money to Nigeria, to Kenya, to South Africa, to Latin America, to the Philippines and Indonesia. I think that is the first point where I saw the actual magnitude of what a broken global payment system, specifically for the future of work, looks like. And I think it was interesting because it was at a point for Paid where we were trying to figure out how does money actually move around globally. Because you see, you don't just wake up and build a fintech, right? You have to get all these partners, figure out how the networks that exist work, etc. At that point, it's around the same time that we also received a grant from the Mozilla Foundation, a Mozilla Africa Foundation of about $29,000. So we had some resources, to figure things out. We had put out a landing page, just a simple WordPress landing page out there with a Microsoft form as a wait list. I think we already had about 6,000 guys on the wait list. So we had all this demand, all this already someone who believes in us with money to keep building this, to try build this thing. But we're still trying to figure out how, money moves. So the exposure of actually handling global gig payroll gave us the opportunity to now understand also this is how you make money actually work for gig workers. And I think that is where we got the realization that the best way to make money work or move globally, for this nature of work, is make money local at both ends, right? So make the payment feel local for the person who's making the payment on the other end, and make the payment feel local for the person who's receiving and spending it on this other end, the freelancer. And so I think 3 months after I joined the company as COO, I quit. It was a well-paying job for a very young one. I think I was making about $5,000 USD a month, and I quit the job to build a fintech. To date, I can't tell you whether that was a good decision or a bad decision. But yeah, that's how we got here.
I mean, the product you're building at Paid is amazing. So as far as I can tell, it was a good decision.
Quick segue. People talk about unicorns, from the perspective of valuation, but I think for me, the goal, the dream has always been being a revenue unicorn. Not just like $1 billion valuation company, $1 billion revenue company. Yeah.
That's a pretty great way to think about it. Nice. Okay. You started building Paid while you were still working in this company or before you joined the company?
That was before. So we started in about 2022 December. That is when we started, figuring out what Paid is going to be. So at that time I was still a freelancer doing an internship. And then now, it was continuously stacking over and just learning as we go until we figured out this is what Paid is actually going to be. First version went out in about August 2023.
Awesome. Okay. So now coming back to how you're building Paid, can you mention like some of the biggest pain points? You've covered them, but how you're actually trying to solve them using Paid?
So I think at the core of how we are building Paid is trying to localize payments on both ends. Because you see, if you have a client in the US, right, or you have a business in the US and you're working with these gig workers across Africa, it's easier for you to do an ACH payment, a local bank wire, than to do an international transfer, because that is where the problem comes in, right? Global payment rails are built for predictable transfers. They're built for remittance, sending money home. They're built for sending revenue back home. They're built for very predictable transfers and very predictable payments. But then the nature of gig work is very unstructured and very predictable. So then at the core of how we're building Paid is just like making every payment local, in the sense that the client in the US feels like they're just doing a simple ACH transfer, and the freelancer in Kenya feels like they're just doing a simple payout to M-Pesa, right? So it's about connecting local payments to build this global network that makes it easy to pay and get paid. One other thing that we realized, I think, really fast, just down the line of building Paid, is traditional money is not built for global finance. And this is where we first interacted with the concept of stablecoins and, just building on top of stablecoins. I was never, those Web3 maxis, Bitcoin, yay. I was never into Web3 that much. I think it came as a necessity because I think there's this time we tried, to move money from our US bank, BREC, to our Kenyan bank. And it was just a whole thing, right? We had the only option that we had that could actually work was Swift. And that meant waiting for, I think, 3 to 5 days, right, for the cash to settle. And then you're like, has nobody really built technology to like get money moving, to make money global, right? So which is the second thing that we've built Paid around, which is it's like utilizing stablecoins to make moving money around the world simple, fast, efficient, low cost. And on top of those two, now what we're able to do is on the freelancer side, provide these freelancers with a wallet that they can easily invoice their clients, send out a payment link to their clients, and just receive direct payments via bank, via card, via mobile money, and via stablecoins. So like very simple payment channels, and only the freelancer needs to have an account, right? Because you see, when you're onboarding a client, the client doesn't want you to tell them, I'll do this gig for you, and you'll also create this payment wallet to pay me here. So how it works is freelancer creates the account, they create this invoice, they share an invoice link, client checks out as if it's a very local payment for them, right? And then on the other side now, for the businesses, we build 2 platforms. So number one, we have what we call the deal for gig work in the global south. So how that works is, we're able to sort of like simplify global payroll, for companies that are working with freelancers, creatives, and contractors, across the global south. Again, it's as simple as, you have this paid for business account, you top up via ACH or via ACPA in Europe, and you just need to be able to automate payments, or just like settle invoices for all your freelancers in one click across all the countries, about 35 countries we support. And then lastly, now on the infrastructure side, we've built what we call Paid Connect. And again, Paid Connect just simply enables, gig platforms, marketplaces, service businesses to have this plug and play infrastructure where they can automate client payments, deductions like commissions, service fees, etc., and, settle the supply side on the other end, which is a freelancer or the creative, within one click. So yeah, that is essentially how we are powering payments for the global gig economy.
Awesome. So you're currently working majorly with businesses in Europe, and we're trying to pay freelancers in Africa?
It's pretty much hybrid B2C, B2B2C. So on one end, we are working with freelancers directly, because you see, the thing with freelancers is a freelancer that doesn't just have one client or one business that pays them. A freelancer will have client A in Europe, what they do for software development, client B, on the other side, what they do for design. So the freelancer has their own wallet that they can use to receive these payments, that they can use to invoice their clients. But then as well, we have this business payroll platform that can then simplify how, businesses in the Europe, in US can also automate, gig payments for the freelancers just across the world.
Interesting. Now you also have another company. I don't know. Is it a core company? You call it the sister of Paid, Vabu. So how does that fit into like what made you to start Paid? Like how does Vabu fit into the general vision of simplifying payments for gig workers?
So interestingly, Vabu started because we needed to keep the lights on.
Oh, okay. Interesting.
I think this was in 2023, when we were still figuring out how to make payments work, just like move money around the world. And then we were seated with Japheth, my co-founder, and Diana, our COO, and you were like, okay, so guys, we have bills to pay. What are we doing about this? And this crazy idea just came up that, we have payment trails. We could, I don't know, just get into ticketing maybe. and I think within 2 days, we built a ticketing platform on WordPress. Onboarded a couple of campuses that were doing events. And it worked. It brought in volumes. It was working. And then down the line, we realized that we were actually building for a segment that is very sort of like adjacent to what we're building, like to the vision at Paid, without knowing it, right? Because how creators monetize, because creators and freelancers are pretty much sort of like sisters conjoined, right? In the sense that while freelancers would monetize by getting gigs, working for people and getting paid for that, creators would monetize by putting stuff out there, right? Creators would monetize by setting up events, selling merchandise, doing streams, etc. And so what Vabu has grown into is essentially like our creator monetization engine, right? So it's the creator side of how we get freelancers and creatives paid. And what Vabu enables today is, just beyond event ticketing, creators are also able to do, video on demand. So, you're doing educational content, you're doing courses, you want to put them out there, you can just like have them on Vabu, guys pay-per-view. You can do streams. Interesting use case is, recently Twitch cut out monetization for streamers in Kenya. Streamers in Kenya are able to do live streams and have guys pay-per-view. So it's essentially just a tool built around the needs of a creator who needs to monetize, right? It's interesting because now that then provides. Vabu was actually the first Paid Connect customer, because then Vabu is able to utilize Paid infrastructure to automate client payments, do the deduction settlements and everything, and just like settle the the creatives on the other end. And we love it because we say it's Paid and Vabu are all about money and vibes, and Paid is the money side, Vabu is the vibe side. Yeah.
Nice. Beyond the payments bit, is there something that you're kind of creating on the side that aims to maybe benefit the freelancers? I think I heard somewhere you're building for something that feels like pension for them, because they're not able to traditionally save up like normal people enrolled in jobs. So is that something you're also looking at?
So the whole vision has always been, I think Japheth loves saying this. Japheth is our growth leader and my co-founder, that we're building a bank for gig workers, right? I mean, I can't say that in front of regulators. We are not building a bank. But yeah, that's the vision. The vision is to build a bank for gig workers, because getting paid is just one part of the chain, right? As I've mentioned, the nature of income for freelancers creative is very unstructured. I don't know when my next gig is coming in, or my next payment is coming in. That makes it hard for me to think around things like budgeting, saving, access to credit, pension, as you've mentioned, insurance. I mean, it's so bad that while I was working in the US company, because I was technically a freelancer, right, a contractor for that matter, I was making good money for a good period of time. But to date, I think my M-Shwari is a credit tool on M-Pesa. My M-Shwari limit is 0, right? My M-Pesa Fuliza limit is, I think, 800 shillings. I think the biggest loan I can get from a bank is about 100,000 Kenya shillings. That just shows you how broken, gig work is, like broken money, how broken money works for sort of like gig workers. I'll use the example of my other co-founder, Vincent, our CTO, right? Vincent has done gig work for a while. He's one of those guys who has direct connections with clients around the world, consulting on AI and ML, and then he works with other freelancers. So he gets the gigs, he reassigns the gigs to these freelancers, and then he pays them. He moves around a lot of money on that, right? I think almost twice what he was moving when he was, working corporate jobs. But then when you compare his credit limit on his corporate account, just because he had a pay slip and it was very structured income then, and compare the credit limit on where his gig money moves, there's a clear disparity, right? And I think that just exemplifies how big the gap is between banking gig workers and actually providing financial tools that work for the gig workers. So then I think, the grand vision is building towards, now as we aggregate the income, because, what happens with the paid wallet is you're able to aggregate the income of this freelancer, aggregate their spending, then I'll just build a model where we're able to understand sort of like the financials of this freelancer and create a path towards them being able to access financial services that work for their unstructured income. So accessing savings, accessing credit, being able to manage their money. And one of the biggest things I think that is even very close to my heart is getting to the point where we're able to offer gig workers with pension. Because you see, how pension works is you work in corporate for a while or in government or wherever, and you build these savings over time, and then that goes into a rainy day fund or whatever you'd call it that can serve you once you're not working anymore. Gig workers don't work forever as well, right? So then they also need, how do I invest for my future? How do I plan for my future as a gig worker? So it's one of the things we're actively trying to figure out. And I think over the next years, as we solidify and just like build further the payments experience for these gig workers and grow, the tangent of how much money I'm moving for these freelancers, we're building towards getting to the point where we can bank the gig economy.
Awesome. I like that vision. And now, as you're trying to figure things out, has there been any regulatory challenges, as you're trying to build this payment network, how's that been? I know there's bound to be some issues arising, but yeah, how has the experience been?
I mean, we've had our fair share of regulatory issues. And we've had challenges with frozen accounts, cash stuck in some countries somewhere. But the one thing I have come to realize, I think it's sort of like a stage of maturing as a fintech founder, is realizing that, regulation is not a barrier. Regulation is there to protect the consumer. And so we've, our mindset has shifted from how do we skirt regulation to how do we chart a path towards, being regulator friendly, regulation friendly, and just protecting our consumers further. And so what we're doing actively right now is just partnering with regulated entities around the world to be able to provide these payment services, as we also work to acquire our own licenses. Because at the end of the day, you see, it makes more sense. It even builds more trust with the customer if they see that you actually have systems in place to make sure that their money is safe, to make sure that you're abiding by the laws of the land. So yeah, we've had our fair share of challenges, but I think they've been learning moments that have helped us sort of like figure out how to make this work.
That's great. And Now I want to move on to the most popular topic right now, AI. You worked in AI consulting. So is there a way there's a connection in how you're building Paid right now, implementing some AI capabilities to improve how you service gig workers?
Yeah, so I think, as I mentioned, one of the biggest gaps when it comes to gig workers is unstructured income, right? And so how you solve for that and how you build, financial tools around gig workers with unstructured income is figuring out how to understand that unstructured income, right? And so, interesting context. Two of my co-founders also have a data/ML background. Vincent is a data scientist. I think his master's was in data science. Diana has a degree in data science as well. And so what we are doing with AI and ML generally is just like using that to basically understand how money works for our freelancers. So essentially just like build a model, a per user model that can help us understand that, this freelancer receives their money by this pattern. They do gigs by this pattern. Their money goes here, their money goes there. They pay their rent here. They do this, they do that. So essentially, just like build a model around the aggregated income and spend, for these freelancers, and that just feeds back to our long-term vision, right? Which is understanding how we can build financial tools, just like generally bank the gig economy. But even just beyond, the consumer side and how we are serving, our end users, using AI tools. I think AI has also been super important in just like optimizing internal processes as well. Starting with liquidity management, treasury management, which is, once you're moving money in more than 1 or 2, 3 countries, stablecoins are also across multiple chains. You need a better way to manage your liquidity reserves and just like balance the reserves. Also just like routing through different providers, so like understanding which provider has the best rate right now. How do I route through that provider? How do we manage interest rates, etc. And even just like from a development perspective, considering that we're a tech company, I think AI has really been useful in increasing the speed at which we're able to prototype and just like giving, you see, the interesting thing, well, there's a lot of buzz about AI writing code. You can just like go all in with the AI writing code, especially in a financial services company, right? Things will happen. Things will happen. So it's what we've been doing is just like utilizing AI has been useful for engineers to just like do quick prototyping, see how things work, and just like use that to help us now build a path towards like getting an MVP out there. So I think it's been they're like the immense use case on both sides on how we are using it to sort of like build our consumer experience and even just like optimize internal processes as well.
Awesome. And just out of curiosity, have you integrated stablecoins?
So our core infrastructure is built on stablecoins. We move once money is paid in fiat, it's settled in stablecoins within the paid ecosystem. So any money that moves within the paid ecosystem is in stablecoins. And then once it's paid out, it's now paid out in local currency.
Awesome. That's great. Now, I wanted to ask what you think about how AI is going to influence. Like we hear the terms unbanked, underbanked a lot of times, but how do you see AI influencing how these two people who most of the financial solutions are bid for?
I think it comes down to two things for me. Number one, of course, as I've mentioned already, is personalization. I think generally, just even beyond the world of finance, personalization is going to be huge because everyone wants a tailored experience. Everyone wants something that works specifically for them, right? So if we're able to utilize AI to build around just giving the consumer an experience that really works for them, I think that's going to be an interesting future to live in. I do want a situation where I can talk to my M-Pesa or even my paid wallet, right? And ask my paid wallet, how much should I save this month, right? How much am I spending on Uber? My paid wallet can come to me and tell me, hey Ben, February is normally a bad month for you. So maybe cut down on the spend on Fridays and save a lot more. January is a really good month for you. Just like save 50% of your income. This is how you can distribute your income, and so forth, right? So just personalization to the point that you can talk to your money and your money can talk to you, right? So that, it essentially helps consumers understand or build a better relationship with their money, for lack of a better word. Along the same lines, I think also agentic commerce in extension, or just like agentic working with money in an agent environment is also going to be interesting, because I think I have a lot of friends who, by virtue of me being in the financial services space, would call me and ask me, hey Ben, I've made about 50K extra this month. Where should I put this money? Should I put it in an MMF? Which stocks should I buy? etc. Right? Which app should I use to buy the stocks? So then if you can get to the point where you're able to use AI to sort of like optimize for the best return from MMF X, Y, and Z, buying bonds, getting stock, etc., and just like automate your money, basically make your money work for itself, or work for you for that matter. I think those two are going to be very interesting use cases. But then again, I believe in the world of finance, one of the biggest things that AI is going to, and is already doing, is just like making it easier for financial services companies to consistently and continuously optimize their processes internally. Right from internal processes, as I've mentioned, like treasury management, fraud, AML and KYC, which is really, 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 really huge. Identifying patterns in payments and stuff like that, all the way to consumer-facing stuff like customer support, and even just like simplifying onboarding. There are lots of use cases, even just like to the financial services, that will help streamline internal processes, which then improves the experience for consumers on the other end.
Awesome. And that just made me think of something. How are you handling KYC or unpaid?
So we try as much as possible to localize it. So for every, I think for the first 5 countries that we integrated, that we had on board, Kenya, Rwanda, South Africa, Nigeria, I try to be physically in those countries and just like understand the local context, right? Because you see, for instance, you can't compare the addressing system in Lagos with the addressing system in Nairobi. The addressing system in Nairobi is not as efficient as it is in, say, Kigali, right? So then the goal is, while we have providers we are working with that are able to help us do KYC and all these checks, we try to build internal models as well, just beyond again, unstructured income of freelancers makes it hard for them to be adequately sort of like verified. And this is why you hear a lot of guys across Africa complain about this blue company that keeps locking accounts, right? I'm a victim myself.
Thank you for masking that. Mm-hmm.
Yeah. So I think it's for us, we try and make sure as much as possible that we optimize our onboarding to just fit local context, to understand how addressing works in this local context, how payments work in this local context, etc. Yeah.
Awesome. That's really awesome. So now moving to the investor side. Are you actively fundraising at the moment?
Yes, we are actively doing our pre-seed round.
Awesome. That's great. What are the unique things you're seeing that maybe if you were also fundraising last year and you're fundraising this year, you've seen some shifts? If you've seen them, what are those shifts, and how are you relating? Are you even looking at foreign investments? And if that's what you're looking at, what has the process been like for you?
I think when I got into the startup ecosystem generally, in 2021, I think, right? My very first startup back in campus. People are raising crazy rounds at crazy valuations, and all the money going around. Especially in fintech. Fintech was like really, really, really hot, right? But then I think what I have seen over the past couple of months of actively fundraising is that there's been a shift from just fund the next shiny thing to actually fund sustainable businesses, show us a path to sustainability, especially now when you're talking to angels and angel investors, show us a path towards us, our 10x, show us a path towards our 100x, payout. So it's like more sane investment, for lack of a better word. It's a good thing, because then that means, if you're focused on building your business right and building a business that actually works, it becomes a lot easier for you to demonstrate, how the business can get to where, because you see, investors invest because they're going to get a payout at the end of the day, right? Because the business will grow and it will get to the point where they make a 10x, 100x out of it. So it's a good thing because now it gives you that consciousness of there's not so much money going around, right? So you need to be frugal. You need to think about how your spend works. You need to think about how you optimize your business, not for venture checks, but for growth and for success. Because I tell my friends that, and even my co-founders, that I don't think fundraising is to keep companies alive. Fundraising is a function of growth, right? Fundraising is there to not get you from 0 to 1, but get you from 1 to 100, right? So I think it's that consciousness, the collective consciousness within and outside the continent has really been interesting. We're mostly engaging with local investors. By local, I mean within the continent first. Also a couple of angels outside the continent. But it's also been a learning experience. I think I have not done a venture round before. So it's been an interesting learning experience. But the beauty with Africa is there's a whole community, founders of investors that you can easily plug into. There's always an ecosystem event happening in one of these hubs. Go to Nairobi, there's an ecosystem event happening there, Kigali, Lagos, Cape Town, etc. So it's I think that network effect becomes really good. So that has taught me that, if you're getting into venture, fundraising, etc., just be out there, sell your stuff as much as possible, sell your numbers, sell what you're doing, sell what you're building, sell how you're different, build a business that works, and the dice is fall, everything falls in line eventually.
It's interesting because I was having, this is out of topic, but I was having a conversation with a founder who's also, they've made a couple of exits, and so I was asking him, like, I haven't seen you so active on socials, because I have the notion that if you're building and not even for the need of raising or for investors to know what you're building, but if you're building, you want people to know about your product and all that. But then he said, like if you're making revenue, then there's no need. Do you believe that? Like if your business is making revenue, then there's no need to constantly talk about it or share it? Do you believe that?
I think there's this quote by I think it's Mark Anderson. He says that I am in this to win and not in a small way, right? So I think it comes down to, for me, how I see it, it comes down to how bad you want to win. Because when you look at it, there are the Elon Musks of this world, and then there are all these businesses that are behind the scenes, doing big money, making big money that we don't hear about and we don't know about. How it works for me is, how I build the network is by being out there, right? How I build that community, how I get, how I get the message of places, by just making, a lot of noise about it. But then for other people, it could just be, let the numbers talk for themselves, which I think also works. But then it makes it, especially in today's world, there's information overload out there, right? It makes it a little bit harder for you to be discovered if you're not out there. So while I think it works, I think you stand better chances of winning big by just being out there, being an evangelical founder, or at least having an evangelical founder.
Awesome. And another question. Are you currently focusing on having, I know you're talking to investors, but what feels better for you? Having the revenue grow the business, or having the investing help you scale?
I think from day one, the goal has always been, grow the business from revenue, grow the business internally. I think one of the primary reasons why we're even fundraising right now for our pre-seed is because, we're looking at acquiring licenses, we're looking at acquiring partnerships and just like having enough liquidity and building up our distribution. So it's from the perspective that, while, internal costs are being covered, because I think our burn rate and the disparity between our burn rate and our revenue at the moment is about, I think, a 10% deficit. So we are pretty close to getting to the point where, our revenue is able to cover our burn rate, our month-on-month burn rate. It's not looking at what do we need to grow faster, to grow bigger, to get, because I think today we're moving about, we just close to $1.2 million in volumes. About 200K month-on-month volumes for 42 businesses and about 24,000 users. So it's now figuring out how do we get from, because we moved from zero, we are about 3, right? How do we get from 3 to 100? How do we grow this, far and fast? Because the other thing with fintech is there will always be a new fintech out there. So then one of the 2 ways you can build sort of like a moat around your fintech is distribution and compliance, right, and licensing. So it's about figuring out how do we build a proper moat around Pay to make it, a better business, the best, not just the best freelancers, the best option for freelancers and creatives, the obvious choice for freelancers and creatives, essentially. So it's fundraising is it's a function of growth for us, and just like looking at the next steps rather than surviving of venture checks.
That what you said feels like such an amazing tagline to use. The obvious choice.
Yeah,
Awesome.
exactly.
And how many countries are you looking to expand to? You said you currently have access to 35?
Yeah, today we can facilitate payments around 35 countries, but then our efforts are largely focused, within Africa in terms of like the freelancer side, and then now in the US and Europe in terms of businesses side, so businesses that are doing payments into the global south. Of course, we're actively exploring, LATAM, Southeast Asia. And you see the interesting thing with the gig economy is, today we bought a business in the US. This business won't just be working with freelancers from Nigeria alone. You'd find that they have a freelancer in Nigeria, another one in Latin America, Southeast Asia, and they want a comprehensive solution that can cover their footprint. So then it's just like understanding, basically just going with the needs of our customers and seeing where the opportunity is, and just like trying to be one step ahead, essentially. But then at the moment, that's where our focus is at.
Awesome. Thank you so much. Maybe just a final question as we wrap up. This has been so insightful. I have tons of questions still, but I'll keep them. I'll ask you later on. But what's the next big thing for Paid right now?
I think again, the goal is to not just to be the best option for freelancers and creatives in the global south, but to be the obvious choice for freelancers and creatives in the global south. So then it's just like continually understanding what our users need and building around what our users need. I think we've really seen a great push with global gig payroll. We launched it I think 3 or 4 months ago. And it's almost tripled our volumes to date, right? So I think it's not like understanding, because then once we're able to capture where these freelancers are getting paid from, it makes it easier for us to sort of like build the downstream as well. So then understanding how we can further simplify payments for these freelancers from the source, right? From these platforms they're working on, and from these businesses that are paying them. We are actively, there's a large B2B2C push we're doing at the moment. And watch this space.
Definitely watching. Thank you so much. This has been a wonderful conversation, and thank you for sharing your journey and your insights and how Paid is building, or what Paid is building. It's really special. And for listeners who want to learn more, where can they find you or Paid online? Follow your news?
So I am very, very active on Twitter and LinkedIn. On Twitter, it's at B3NPaid, and on LinkedIn, it's Benaiah Wepundi. You can find Paid at paid.money or Paid HQ on Twitter, and Paid HQ on LinkedIn as well. Let's get you paid.
Awesome. For our listeners, that's all the time we have for today's episode. Thank you, Benaiah, for joining us. And if you enjoyed today's episode, go check out Paid, follow Benaiah on socials, and share this episode with someone building or investing in fintech. That's all for today. Bye.
Bye.